I'm actually saying that the UK is in stagflation, not inflation. Jeffrey Halley, OANDA Asia Pacific. As was expected, the RBA yet again left the cash rate unchanged at 1.5% on the 4th of July. With the RBA being one of the few main central banks not to adopt a hawkish tone, traders are looking to the meeting minutes to determine the bank's next move. Jeffrey, what do you think the minutes this week will reveal?
Well, Celeste, I think it'll be very interesting to see if actually they start swinging around to that general sentiment you alluded to. There definitely does seem to be some change of wind in the air with regard to a lot of the major global central banks adopting a slightly hawkish tone, the most notable, of course, being the Bank of Canada with their rate hike last week. The data generally within Australia has actually been on the move to the top side, with general improvements in stuff like the domestic labour market and retail conditions and business sentiment. Also, exports seem to be doing better as well. That aside, I do think it may just be a little too soon for the RBA at this cycle, this meeting, to have mentioned possible tightenings in the future. I feel that the more likely case is that it's more of a steady as she goes point of view from this particular minutes. With some acknowledgement of some of the other hawkish sentiment. But going forward into the second half of the year, assuming the data holds up as is, we may well see that tone emerge from the RBA as well.
And on Tuesday, the UK's June inflation rate will be announced. Consumer prices in May increased by 2.9% year on year, the biggest inflation rate since June 2013. These strong figures are coming from a weaker pound and are putting a strain on citizens as inflation is continuing to outpace wage growth. What are you expecting for June's figures and for inflation in the UK looking further ahead?
Yeah, this one's a little bit more of a tough one. I'm actually saying that the UK is in stagflation, not inflation, where sort of effectively wages fall and growth falls as inflation rises. It's sort of one of these really dirty words that central banks don't really like to talk about, to be honest, but it certainly looks like a classical case here. I think that the number itself should come around about 2.9%, which is about the market consensus. If we come in above 3%, I think there'll be a cold sweats happening in the Bank of England's corridors of power, to be honest. I do believe that they do not want to raise rates into this climate as the Brexit negotiations get underway in full swing. We have the second round of them starting this week. They also don't want to really see the pound strengthen notably either, which would be anti-inflationary, because I guess that with the Brexit scenario coming up, what they'll be looking for is competitive exports, and that won't happen if the sterling was suddenly to run up to sort of 140, 145. So I think at this stage they're going to take a deep breath and continue blinking, and hopefully this inflation mollifies of its own accord. Otherwise, I believe that any rate hike from the Bank of England won't come until we have a much, much clearer picture of what the Brexit landscape will be and the effect that it will have on the pound and on the economy in general.
And finally, on Thursday, the ECB will announce its benchmark refinancing rate. The market currently expects no change, but what are your expectations and how do you see the euro reacting?
Yeah, I think with this one, it's all going to be about Mr. Draghi's press conference shortly after the rate announcement. We are not expecting anything ourselves from the ECB this week. What will be key is that during the press conference, do we see an increase in hawkish sentiment from Mr. Draghi himself, or the beginning of some signals that they're going to start seriously winding down quantitative easing with a view to start moving rates higher. Also an outlook on the euro economy itself. We are at near two-year highs in the euro at the moment, and I would expect that the euro will stay bid on any sort of dips, to be honest, particularly after the CPI figures in the US last week, which has sort of torpedoed the US dollar in general. So I'm expecting that the euro itself will have a test of 115 at some stage this week. And if there's any hint from Mr. Draghi at all about any sort of hawkish sentiment, no matter how small it is, we'll see that 115 broken and the euro move materially higher.
Thank you for joining us today, Jeffrey, and providing your market analysis. So those are some key events to watch out for this week, but don't go anywhere. We have plenty more market analysis coming your way.